Happy New Year, everybody. Happy 2025. The year, fortunately or unfortunately, depending on how you look at it and which bang we're talking about, has absolutely started with not just one bangs or two bangs, but several bangs. Some good, some not so bueno. We'll get into all of that. I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle, amongst other notable adjectives and hats that the gentleman wears. This is the 299th episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk about some of the trends that would dominate 2025. The biggest one, I believe, personally, speaking for myself, is volatility. With that being said, I think it's going to be a really, really profitable one in 2025. I should also note that this is the last Bizarro World podcast that will be available completely free, stock picks and all stock discussion and all. And so I hope everybody that has joined us, for all these years, sticks along with us and follows us on over behind the paywall there. It should be well worth the minimal fee that we are asking for. But before we get into all of that, Mr. Hodge, how is your New Year started off, sir? Happy New Year, man. It's good to be back here.
Also with a bang, Gerardo. I reached for my firearm. You start talking about shooting. I was getting ready.
And that's one of my major themes for 2025. I think everybody's going to have to stay ready, man. I mean, it's I hope your family is well. I hope your New Year's went well. Let's start on a happy note, right?
Yeah, family is great. That rifle actually comes from my grandfather. It's an old, I think, 1930s 22. It's dysfunctional. It doesn't work anymore. But I do keep firearms within reaching distance, whether or not they work or not. Family is good. How's your family? You have a good holiday?
Excellent. The boys are healthy. Had them all home for the New Year's. The wife, per usual, cooked her behind off. Had my sister, had my brother, had his husband, had the whole family in town. Had a great time. Had some great drinks. Set some nice goals. And no, we always start the new year off together when possible. It was really, really nice to be able to come together and spend, not just New Year's, but Christmas as well. And so with that said, it's great to be back. It hasn't been uneventful. Societally and economically, there is a lot going on. Let's start with the markets, right? I think we have to start with the markets because 2025 is going to be what I think it's going to be a very, very volatile year. And let me tell you why. The things that I saw today in, the first major trading day since the New Year's closings,
Yep.
Right? Absolutely. China's in trouble. And China in trouble is different than America in trouble, in my opinion. And I've said this before. The reason being, I believe, because of the way the government is set up and their economic top to bottom is how I describe their economic structure and hierarchy. I think it's a lot more flexible than ours. I think it's a lot more prone to overprint and overstimulate. And I think when you see what the bond market in China, because it's always the bond market, right? What the bond market in China is doing, I don't think it's a coincidence that you see gold up near the $2,700 level again. And you see silver pushing 30 after, a mini beatdown last week. This comes with the dollar index, Nick, and we've been watching this for at least 36 months, right? The dollar and where it goes, and longer than that, but really proactively watching it the last 3 years because we got ahead of that trend. We thought that gold and silver would return to tick back upwards as the dollar weakened, and then made a U-turn. Dollar index is at 109.25, making 0.7%, almost 1% moves on a daily basis. And despite that, gold picked up some $34, trading at $26.58. Silver's at $29.52. That to me tells me that the buying keeps happening from the East, which has been the dominant theme in 2024. The West has participated, but it hasn't participated in a major fashion. It hasn't participated in how you would expect it to participate when gold is at record highs. The buying is really coming from the East, and it makes all the sense if China sees cracks under the hood or cracks in the foundation. Thoughts on the Chinese bond market, and then we can talk about our bond market and our dollar and what that implies, right?
I need you to tell me first what the Chinese bond market is doing. You alluded to it, but give me and the readers or the listeners an explanation.
No, look, the bottom line is the faith in the bonds are crashing in China, and the bids are going in the wrong direction. Despite all the Chinese stimulus, and so anytime you get a bond market shakeup, right? The bond market there is supposed to be like the bond market here. It's supposed to be a safe haven. It's supposed to be where investors are able to park their money and get a minimal return, but a guaranteed return. And when you see a bond market crashing in China, what that implies is insecurity about the surety of those bonds and the safety of the economic health of the country. And so again, I think it's going to lead to massive stimulus. The ECB, the European Central Bank, just announced it's ready to start cutting rates in a major fashion again and ready to counterfeit money, all print money, right? Counterfeit money. And so I don't think it's a coincidence the dollar here in the US is going, I'm the king, bitch. Like I'm going to 110 and then I'm probably going to 111. And I'm also not surprised that the dollar and silver, which traditionally have correlated inversely, right? It's usually dollar higher, pressure on gold, pressure on silver, pressure on anything that correlates with the US dollar. It is saying, no, 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 we're coming with you. This is not a US dollar gold thing. This is a Chinese bond market. And we know there's going to be a lot of safe haven buying coming from the East. I also don't think it's a coincidence that Bitcoin, as Mr. Chris Curl was saying, when Bitcoin was back down to 91 and 92,000, is back closer to 100 than it is 90. All of and look, you could argue or not. I'm not a crypto guy, but I would argue that Bitcoin now is becoming a safe haven asset, and that it absolutely has utility. And I think it's catching a bid on the back of the bond market crash that's happening in China right now. Really curious to see how the Chinese government reacts. I think it'll be forceful, but we'll cross that bridge when we get to it. That bridge doesn't exist right now.
Yeah, to be fair, the U.S. bonds are crashing as well, right? I mean, TLT is down 6 to 7% in the past month as the U.S. 10-year yield creeps ever higher. So what you were saying is, Chinese bonds are crashing. Another way to say that is that yields are rising, right? I mean,
Mhm.
bond prices trade inversely to their yields. It's something that's tough to wrap your mind around, and not a lot of investors spend enough time looking at because it's always, stocks, coins. What can I buy? It's not, people aren't in there buying bonds like governments and quasi-governmental agencies, for example. So U.S. bonds are going down as well. There's been, recent talk of bond vigilantes, and I'll be honest, I spent some time reading about bond vigilantes because that's not a term, like a term that you hear all the time, but it's not something you spend a lot of time with. Like, who are these bond vigilantes? Where do they live? Like, who are they? Right. So essentially, what it means is that the government says one thing, or government agencies say one thing, like the Fed saying we're going to take rates down. And the bond vigilantes say, the fuck you are. That's not enough. That's not enough interest rate to cover the risks that we see going on out there. We're going to sell bonds because we need a higher interest rate to make it worth our while to do this damn thing, right? And that's why, since the Fed started cutting rates in September, the U.S. bond yields have gone straight up. You mentioned China buying gold. They were the largest buyers for a long period of time. And then we
Sure.
saw late in 2024 other central banks starting to buy up. I think the last World Gold Council report I read said that Eastern European central banks like Turkey and Poland were in a very real way starting to step up to the buying plate, as it were. And I was writing in Foundational Profits, watch what they do and not what they say.
Yep.
These central banks are still buying gold in a very real way. And then, as you alluded to, gold is going back up, closer to $2,700 an ounce than $2,600 an ounce, putting in a 30 or 40 or $50 move in a day. Um, you mentioned volatility in the first trading day of the year. I should touch on that as well. Some people say that, the first day or a couple of days of trading of the year are indicative of what the rest of the year is going to look like. And yeah, the Dow was up 200 points at one point today, and then it finished down. If I can get a little refresh here real quick, it finished down 151 points, right? So inherent volatility there. And then volatility itself was starting to peak up just a little bit. You had a very complacent VIX for a long time, down around 14. And then in the past couple of weeks, really, while everyone was, drinking their spiked eggnog, you had a sell-off of some tech names starting to roll over a bit, and then the VIX percolated up to around 18. So a lot going on out there. I don't know about China specifically. I'm not a China expert. I do know that they can and have been, stimulating,
Sure.
saying they're going to stimulate. Copper doesn't believe it, which I saw you put on the sheet, going down to around $4. At the same time, oil's been going up for the past 3 weeks, and this is sort of what I've been saying
Mm.
sort of since the
Yep.
election. Right, we need some closure. Which Lord, we haven't gotten this week, but I'm
My
sure
God,
we'll
we have
get
not.
to it.
Holy
Um,
smokes. We got the
but
opposite this week.
yeah, so just really, that's it. Volatility until we get some real direction, until we know what Trump is going to do, because he is a wild card, until we know what this Department of Government Efficiency is going to do, until we just honestly get through this transition, right? I think we're in sort of a vacuum right now. And unfortunately, there's been some things that have stepped up to fill the vacuum in news and the vacuum in leadership.
Well, let's I don't want to get into the Trumpster just yet. I just will say, because this is the segment, right, where we typically take a macro look at everything. I don't think the administration did itself any favors by, coming out last week, I think it was, and saying that, you know, they see the potential for a 1929 style depression and crash, right? Just 2 weeks or 3 weeks before the administration takes office. Definitely not what was said on the campaign trail. Definitely not what was promised. Very, very excited to get him in office and start actually seeing what the policies are going to be. Because again, and we said it last time you and I met here on this podcast a couple of weeks ago, the rhetoric is one thing. How you govern is a whole other thing. And you said it best. Watch what you do, not what they say. And so I'm definitely watching to see what they do. But look, I mean, the 10-year note has a yield of 1.697%. That's the lowest on record. And to your point, the bond market just doesn't believe that China's been aggressive enough. I think China has the wherewithal and the political will to make sure that the bond vigilantes are satisfied. And that term comes from the late '90s. I'm old enough to remember Clinton being in office, and he's the last president to balance a budget here in America. And he was talking about stimulating the economy. And he had a meeting, and basically what they told him was, you got to get the bond vigilantes to get on board. And he goes, what? Because yeah, if the bond vigilantes don't play ball, like, you're gonna have higher rates and you're gonna have, a harder time stimulating the economy. And he said, so I'm fucking beholding to the bond market. And somebody said, Mr. President, it's always the bond market, right? It's always the bond market. So look, I know it's boring to watch, guys and gals. That's why we do it. But yes, you want to watch the bond market. And again, it's very easy for us to be US centric. It's important that we take a global view about what's going on, because it's easy to say, we have $36 trillion in debt and some 120 or 130 trillion in unfunded liabilities that prior generations have borrowed and been forfeited on, and look at the dollar and say, well, it should be worthless. It's going to zero. Well, it may in due time, it may eventually, but it's going to last a whole lot longer than some of these other currencies whose balance sheets look absolutely many multiples worse than ours. So right now, it's King Dollar and look, King Gold is right behind, right? And silver's taking a cue and running right behind it. And so our portfolio is positioned personally and in the letters. I mean, we there's a lot of exposure to gold, a lot of exposure to copper, a lot of some good exposure, quality exposure to silver. Lithium is my contrarian metal for 2025. It's also my contrarian metal for 2024. So hopefully I do better with that, but I am positioned well there. And I couldn't be more excited about 2025. I know we started with a little gloom and doom with the bangs happening around the country and the bond market implosions going on in China and here in the US. But I think everyone should prepare for a volatile year that has disproportionate runs higher and corrections that are mean and vicious, that are going to shake a lot of inexperienced traders and speculators out of really good positions, right? It was really easy in 2024 to get shaken out of the lithium sector. Well, I didn't invest and allocate capital in the lithium space 3 years ago just for 2024, right? I did it with a 5 to 7 year term in mind, and fully knowing that after we're up many thousand%, we're going to get, a retracement of 60, 70, 80%. That's perfectly normal in a bull cycle, especially when China's flooding the market. So I say all that to say, we're positioned well. I hope people are following along with the letters. I really hope everybody follows along with the podcast. And Yeah, I think it's going to be an exciting 2025. What do you see on the horizon for this year, Nick?
Well, I would add two more things there. I think people should prepare for higher prices and potentially higher yields. And I'll start with the yields first, and then I'll talk about the prices. You just mentioned the Clinton administration. I still have up here my Wikipedia page about Bond Vigilantes. There's a whole section on the October 1993 to November 1994, the Great Bond Massacre, which is what you were just referencing, right? And it says the yields climbed from, you ready? Yields climbed from 5.2% to just over 8%. Guess what, folks? Yields aren't even at 5% yet. We had much higher rates in past lives that people in this 21st century. My mom was visiting for Christmas and she kept saying, back in the 1900s, we used to do it this way. It's like back in the 1900s, the bond rates, the bond yields used to be 5%, right? And that was just 1994, 1993. So, rates can go much higher. We lived in the zero interest rate world for so long that, people look at 6% mortgage rates, 7% mortgage rates, and they're pulling their hair out. And it's like, look, man, they're historically much higher than that. And it can go higher again. And in fact, after ticking down for a couple of months, I saw recently in the past couple of weeks that mortgage rates were ticking right back up as well, even after the December Fed rate cut. So that's one thing. The other thing is that inflation is back on the rise, right? We were talking about the bird flu and things a couple of weeks ago. Look, in the past couple of weeks, eggs have become a meme unto themselves. I've seen, pictures of people proposing to their fiancés with, instead of a diamond ring, a dozen of eggs, right? I mean, these commodities, soft commodity prices are through the roof. And yeah, there's some bird flu going around, but there's no cocoa flu. There's no coffee flu, right? Like these things are going up, and you just got a reacceleration of inflation. I think you'll see the same in the next two monthly prints. So that's that. And then what's the other thing I've been seeing a lot of? Oh, a return of recession talk, right? And
Mm.
this really depends a lot on the government and what the policies are. So we got to wait. But
Yep.
nonetheless, man, the employment still looks okay. The GDP still looks okay. And so, I get black swans and all that sort of stuff. Believe me, I understand what that is. But, just looking at the actual data, it doesn't seem like a recession is in the cards, certainly not in the first half of 2025. So I would fade that talk is I guess, one piece of advice I would give.
No, I think you're spot on. I think it's worth having, you've come to know me over the past several years, Nick. I'm high risk, high reward. I don't like to keep a lot of cash. I consider my stocks liquid. I take on large aggressive positions, and when I win on those, I do very, very well. I try to hedge those large aggressive positions by taking, three big ones at a time. When we're fortunate enough to feel brave enough and have it be logical enough to take three simultaneous big positions, right? But then I try to hedge those, with some lottery ticket positions that are smaller in terms of dollar and percentage, but could be consequential if they hit, and if they miss, isn't consequential to the overall portfolio. So I say all that to say that even I this year am thinking about having a little bit more of a cash reserve in the event that we get one of these black swan events that, scares the cheesies out of everybody, for a couple of weeks or a month or two, because that's absolutely on the table for 2025, given the geopolitical positioning that's happening around the world, and some of the domestic incidents that are starting to increase in frequency and violence here at home. And we'll talk about that here in just a little bit. But I do want to get to, the second part of that the macro takes that we do, right? And that would be just talking about some company specific things that I'm looking for. So I don't personally have a stock pip. I know you have one, and we'll save that for the end of the episode. But I do want to talk about sectors that I think will rebound, and companies that I think you should all be watching. I think again, I had a tough year with the lithium sector last year, but again, this is a long-term trend for me. I think lithium is going to have a pretty sustained rebound. I don't think it's going to be, a doubling of prices, but I could see a 30-40% bounce, which will translate to a significant bounce in the better lithium companies out there. That includes producers, that includes companies that have, world-class tier one projects like Patriot Battery Metals, companies that are in the midst of delineating world-class deposits like a Q2 Metals. And then I think there's several companies, including a couple of private ones, that are going to be coming public here soon, that have the potential to make some noise in the lithium and the battery metal space. So I'm definitely looking forward to seeing drilling resume. I'm looking forward to higher gold prices. I'm looking forward to higher silver prices. I think everybody knows, my second or third largest holding right now is a company that I'll tell you later on. But I think, it's a company that I think is going to do very, very, very well. And then I still like copper, and we have to talk copper really quick, Nick. I know I'm all over the place with it, but we didn't touch on copper. I didn't like how it closed the year. It broke below 4, up moderately today. Gold and silver are up pretty substantially. Copper doesn't look horrible, but it doesn't look great yet. Do you think Chinese stimulus, if we do cross that bridge, like I think we will, if it's a bazooka, gets that metal going once again and breaking out towards past the $4 level and towards the $5 level?
I mean, I don't see a close below 4, or to be fair, I see $4 and half a cent back in, um,
Yeah, so it held it.
yeah,
Maybe it
it
was
held,
intraday.
I mean, yeah, it would have been $4 flat, it bounced. Anyway, that's neither here nor there.
Yeah,
You need a lot more copper, right? And we're gonna talk about cobalt in a second here, but, people are starting to realize that expanding mines isn't finding new mines.
ooh,
You can't have all these climate goals and EV goals without the copper. I mean, all the narratives, right? So,
sure.
um, it technically it looks good that it held at 4. I think you probably get this China overhang, right? If China's having all these problems, for me, that's what was dictating it. That's what I was telling you months ago. Like when they
Sure.
first started stimulating, I'm not ready to buy copper yet. We got to wait and see how it pans out. Um, I just tell you what I do, like, and I haven't even done this in the letters yet, and that tells you how unsure I am actually of it. Is I started buying some tax loss positions because towards the end of the year, some of these copper names were really weak. The Arrows of the world, the Freeports of the world, the Rio Tintos of the world, even the Ivanhoes of the world were relatively weak headed into the end of the year. And I'm a long term copper bull. Sort of relates to what you said about lithium, right? Like you didn't take all these big lithium stakes just to
For one
sell it
year.
until right, exactly. And
Yeah.
I heard Rick Rule saying this about uranium the other day. Like,
Yep.
these people have in the uranium market and they're invested in a 5-year thesis and they want it to play out in 6 months. Well, that's not quite how it works, right? And the approach that I've been taking in my portfolio and in the interviews I've been given as well is like, look, you always get the questions like, what do you expect uranium to do in the next 6 months? And it's like, I don't know, man. I've been invested in uranium for 12 years, right? And I've bought and sold companies and companies got acquired and et
Made
cetera, et
thousands of
cetera.
percent on those companies.
Right. So it's like, it's interesting to think about what's uranium going to do in the next 6 months, but that's a speculation, right? But what's less speculative is what's uranium going to do in the next 6 years, right? And sort of that's what I'm invested for. So, and the same with copper, right? So, look, um, eh, some copper stocks have done all right. Like we were talking about Aldebaran in this
Sure.
podcast a lot. That was a company I financed. I'm not sure if you did or not, at 30 cents in 2020, and it ran to well over $2 this year, even as copper, the underlying commodity price, was going the other way. And so, um, I guess the point I wanted to make is that we sold some of those shares, but I'm redeploying it into new copper names because there's copper names that are debased because copper is cheap, right? So hopefully you can follow that along in your head. There's some copper stocks that did okay. We took profits. There's some copper stocks that are weak because the underlying commodity. I'm redeploying that capital into those that cheap names that I view as quality names, whatever they might be. You have to read the letter to find out about those, or your letter, because we're not going to be giving free picks away in this podcast any longer. But I'm starting to get into word salad now. But I'm a long term copper bull is the answer, and it's weak in the short term. And I can't tell you when it's going to turn around. Seems to want to hold $4 pretty well. I mean, the writing is on the wall for the future. And there's just no new production on the horizon, right?
Yeah.
Is what tells me that stay invested in the sector. Your thesis is intact, and it always takes longer to play out than you think, right?
Couldn't agree with you more. I will mention one company also that you should be watching for, and that's Perpetua Resources, right? Formerly Midas Gold, a company that we also helped finance once upon a time, way back in the days. That's had a heck of a 2024. It was one of the top picks for us in early 2024. Performed absolutely beautifully on the back of higher gold prices. Department of Defense known for its antimony credits and the fact that it's also got a tier 1 gold deposit in the great state of Idaho. I expect a final decision of record here, meaning here's your permit, go get bought out by somebody now. any day now, any day, any week, but it should be right around the corner. I don't think it's a coincidence that stock again is near at all-time highs. I think that is going much higher. I know it's had a heck of a run, folks, in 2024. Guess what? It's going higher and is going to get bought at a much higher price. John Paulson doesn't own the amount of stock that he owns to start building gold mines. I don't think that's that gentleman's plan. I think the plan was always to monetize the asset. He's got a historic gold bull market behind his back. He's got antimony exports banned from China. They happen to have a bunch of gold. They happen to have a bunch of antimony. They have Department of Defense loans. They're likely approaching the Department of Defense and under the guise of the Inflation Reduction Act for potential financing on a processing plant and a mill. So there's a lot going for that company that if you're a Barrick Gold or, you're one of these bigger companies where a couple of $1 billion doesn't mean that much, but the reserves are material to your bottom line, you go write that check once that permit gets delivered and you go build the heck out of it as soon as possible. Thoughts on that one, Nick?
Oh, I'm still a perpetual shareholder. I've been selling some shares here over the past 6 months. I think I sold some in July when they ran to $6 or $7, and I held the rest until now. But I'm starting to come off that. That was a 10-year play, right? Sort of like Aldebaran, right? And moving on, and then we'll reinvest those profits into the other, potential gold plays. I did reach out to the company last week because we were expecting the record of decision by the end of the year, and he said, "Look, we're counting in days now, not months." They extended the Department of Forest Service on their website until January 6th, but it's going to be any day now, and they've already got the draft record of decision, which is the decision, and then they just got to formalize it because they're the government. So that's definitely coming. And then I want to talk about uranium for a second. If you
You
want,
beat
if
me
you want to
to it. That
switch
was
there.
next.
So,
Yep, that was
um,
next.
good. So this is sort of the market take section. We're trying to divide this up into sections, and uranium had some news to kick off the week, or to kick off the year. In fact, relatively weak in the back half of 2024. Spot prices dipping down below $80 a pound, whining from the quote unquote retail end of the uranium spectrum. The trade is dead, et cetera, et cetera. And then this morning when I woke up, one of the first headlines I read was that the Inkai JV with Cameco and Kazatomprom was, facing delays. It's still too early to know what that was. You sort of got to read between the lines. It doesn't seem like it was just a paperwork issue. I mean, it's the state-owned miner arm, right? Kazatomprom. It's like they can take care of their own paperwork and they can take care of the country. There might be something deeper going on there, but nonetheless, Cameco said, we've got to basically mothball production at this mine, which is responsible for 7%. I looked it up this morning. 7% of the global mined uranium on any given year. They mine about 8 million pounds a year from this Inkai JV. And lo and behold, the entire sector was up 10 to 15% across the board. I mean, the juniors were up, the mid-tier developers were up, the ETFs were up 10 to 15% today on just one mine saying that it was going offline, and not going offline indefinitely, likely just a short-term hiccup, right? But it shows you the precariousness of supply. And it shows you how willing capital is to rush into the space when they see an opportunity. So my takeaway was the uranium trade is not dead. The supply demand imbalance is still very precarious. And those that have quality deposits are going to be rewarded again, maybe not over the next 6 months, but definitely over the next 6 years, right? And so you just got to read and react to the market and take it as it comes. But for me, I just wanted to touch on uranium, one, because we get many more views when we talk about uranium, as we put uranium in the title because it's got some pretty rabid investor following. But also because there's money to be made there. Like, not only does you have this announcement this week that buoyed the names, but you have the turning of the calendar, which means some of those debased names that people may have been tax law selling, and this is true of other sectors as well, not just uranium. But they have that that thumb came off the scale, or the valve is opened up now, where you don't have this tax law selling pressure at all. So the stocks can go up more than they would have in December, perhaps. So I just wanted to call out uranium there and say that this trade isn't dead, and there's very obvious things you can point to and look at to say, again, how precarious that supply-demand balance is.
Yeah, listen, far from dead. And again, the consolidation in the uranium space has been tough if you just started buying like in the beginning of the year, right? You've had a pretty material pullback. It's a phenomenal opportunity, y'all. If you have a timeline of 2, 3, 4 years to position yourself in the best names and then add a couple of exploration companies that can really give you that torque if they're successful. and just sit back and wait for prices to go higher because they absolutely are. AI is very real. The energy demand and the energy inputs that AI demands is very real. It's not a coincidence that every major corporation around the world is rushing to secure nuclear and energy for their data centers. That is not going to slow down anytime soon. If anyone thinks that Amazon or Google or any of these companies are going to be asleep at the wheel to lose market share to each other by not securing their energy needs for the next 20 or 30 years, I have a bridge in Brooklyn to sell you all. It's just not going to happen. So that's one that, again, if you're new to the uranium space, do a little research, do some due diligence, look at AI data centers, look at energy consumption projections for the next decade or so. It is a mega trend that is absolutely your friend. And then you can make a lot of money on it if you pick the right companies and stick with people that have done it before and that have been successful. I've given you several picks on this podcast over the past several months, positions that I'm long on. So all you have to do is look back and listen, and you can see what those are. One is still ridiculously cheap, $5 million market cap. It's almost a freebie, but I'll give it to you guys at the end. But yeah, I absolutely think uranium's going to have a heck of a year. Um,
You made a good segue to these next two sections. So I wanted to talk about stock market flows, and then I wanted to talk about this kobold raise that happened in the past couple of days. And that's a
yeah.
good segue. So you mentioned the tech sector, right? That's been leading the market for a couple of years now, FANGs and all that, right? And I just wanted to make a point that, the stock market, the S&P, pull it up so I get it right. It went up 23% in the past year. That's a heck of a return for an annual index that typically goes up 8 to 10%. So let's just say that. But here's the thing. The S&P has 11 different subsectors, right? Consumer
Mm,
discretionary, consumer staples, on down the line, industrials, real estate. I won't name them all, but there's 11 of them. Only four of those 11 sectors outperformed the market last year, and those were the sectors that were driving the market, right? IT, consumer services, and consumer discretionary, which Tesla and Amazon are in the consumer discretionary. So those are three of the four sectors that drove that 23% performance by the S&P. All the other sectors did not hit that 23% return. The utilities were below it, staples below it, energy below it. Materials were actually negative for the year. They lost money. The materials sector down 2%, while the rest of the S&P was up 23%. So I just wanted to talk about these stock market flows because, there's thousands of ETFs listed out there. There's ETFs for everything. There's ETFs for these subsectors. Obviously, you can buy a healthcare ETF or a real estate ETF, not just an SPDR one, but one from Fidelity or iShares or ProShares or Black, all down the line, right? Now there's leverage ETFs, there's gold ETFs, commodity ETFs. Only 11% of those thousands of ETFs outperformed the entire market last year.
mm.
And I bring that up because the point I want to make is that it was so concentrated at the top. And we may know this, but it's worth repeating that on some days, these tech stocks were responsible for 30-40% of the market move. And as a result, many hedge funds and many individual investors did not outperform the market last year. So that's worth noting as we get a little bit of weakness in those names. But the other reason I wanted to bring it up is because those guys have real power, right? Like it's one thing for Nick Gerardo to sit here for the past 5 years and say, y'all are going to need uranium if you want to do any of this stuff. But it's a whole nother thing when these trillion, 2 trillion, in fact, Apple's hit $3 trillion market cap. When these $1 trillion market cap companies say, you know what, guys, we need to build some nuclear reactors. We need uranium. We need SMRs. It's a completely different ballgame than the tiny little mining sector. Um, which, by the way, is I think one meme coin has like a bigger market cap than the entire the mining sector at this point. So shit's crazy out there. But it's
Isn't that something?
different when these tech companies start saying that they need resources, they need uranium, they need copper. It's different than the actual resource sector saying that. And then I'll just go on to our next section here, which we're going to call Bizarro Banter, where we talk about some of the bizarro things going on in the world. And one of them I saw this week that the mining industry has been ferociously tweeting about is Kobold, which is it's a private company backed by Bill Gates and Jeff Bezos and a couple of other VC arms that is using artificial intelligence to look for mineral deposits. Now, you and I are involved with some companies that are doing this as well. But again, we're not Bill Gates and Jeff Bezos, right?
Correct.
So when they go out to raise money, which they just did. They're raising it at a $3 billion valuation. They got this company who's never mined a pound, an ounce, or a metric ton of anything. And it's got a $3 billion market cap, and it just raised $537 million. And so, I don't think there's any, traditional mining company not led by those two gentlemen that could go out there and do that and fetch that valuation, right? They're simply getting a tech company valuation on a mining stock. And what I would say is that is wonderful for the mining sector because
Absolutely.
there's lots of reasons, right? So, I just said they've never produced anything. They found this big copper deposit in Zambia, which they say they're going to have online by the early 2030s, but that they haven't even done a pre-feasibility study on yet, right?
Yeah.
And so I just wonder, at some point, the market's going to realize, wait, why does this company have a $3 billion valuation and whatever? I won't name all the companies now, but these other quality mining companies who actually have something real, like why are they valued so low, right? Um, and then the other thing is, back to what you were saying about the Inflation Reduction Act and what we were talking about recently with Volkswagen and lithium. It's like, well, mining copper in Africa is great, but it's not mining copper in North America, right? It doesn't do anything for the North American supply
Yeah.
chain or for the tax credits that you need. And so I think there's still other jurisdictions that are going to come into play. Kudos to them for raising 5.5 or 550 million bucks at that valuation, but that's not real in the mining world. All it takes is a couple of clicks around the market
Yeah.
caps of some of these companies to see that one of these things is sort of not like the other. So I don't know if you had a chance to see that or had any thoughts on that, but I think that's really good for the mining sector.
No, my thoughts are your thoughts, right? I think, as it relates to the uranium space, for example, and, we talk energy, it's all related, right? You need copper, you need uranium, you need lithium. I mean, these are all, they're called battery metals and clean energy metals for a reason. And so what's good for the goose is good for the gander in this case. And what's good for Google and good for Microsoft and good for Tesla and good for all these corporations, it's going to be really good for companies in those sectors that are making discoveries and building on those discoveries and getting those discoveries in a position where the asset can be built and can be monetized. Our job is to find those opportunities early and to catch them before, that kind of money comes into the sector because again, yes, Patriot Battery Metals had a tough 2024. I could care less. It's going to have a great 2025, 26, 27, 28. And Volkswagen knows that. So, if we can identify and some of it's dumb luck. Let's be absolutely clear. It's not because we're brilliant, folks. But if we can identify a Patriot Battery Metals at 16 cents with an $8 million market cap, which is when we recommended and financed it, um, am I upset that it went from $1 billion company to a $300 million company? Absolutely not. I would rather it already be a $4 billion company. It'll get there in due time. And in the meantime, you get a chance to load up again at bargain basement prices. I say all that to say that all of these sectors are going to benefit from, as you stated so eloquently, big corporate capital coming in. The nuclear space, the uranium space is a perfect example. It's such a small market that small amounts of capital move the needle and the goalpost in a very material way. Large amounts of capital have the potential to make for a historic bull run and one that frankly I'm positioned for and really looking forward to.
Make no mistake, we're going to get into the rest of the bizarre banter now, which is going to deviate from some of the market. But one just quick story before we do that. I went on a goose hunt over the holiday with a group of guys, and we had to take an hour and a half ride. And the truck that I was in, the guy who was driving, he's a pretty serious construction manager. He runs construction projects for the states and for the federal government. He builds bridges, he builds dams, like big construction projects. And we got into sort of some of this conversation, right? What do I do? What do you do? Get to know people conversation. And he starts telling me about these federal mandates, sort of like the Buy American, right? The Infrastructure Bill Act. And he says, when I build these projects, we're supposed to, and we get federal funding, we're supposed to get everything from the North American supply chain, sort of like we're talking about now, right? And he says some of the stuff it physically doesn't exist, right? He says if I need a certain size, I think he was saying half-inch or less bold for signs, for street signs or whatever, I can't get those made in America. It simply does not exist. They have to come from China, right? So he's saying the federal government puts out these mandates, and then it gets really convoluted, and I would have to talk to them again to understand it all thoroughly. But then they put the onus on the states, right? So they make the mandates at the federal level. They give the money to the state, and they say, okay, state and construction company, you got to fulfill these mandates. And then they have certain allowances for the things they can't get made in North America. And he was complaining about the stainless steel and the iron. So my point is that it's not just critical metals and these obscure gallium, antimony things that we're talking about. This gentleman can't get stainless steel bolts made in America, right? Like, I just think things are going to change a lot in the coming 10 years.
Yeah, I couldn't agree with you more. I think there's going to be a more nationalistic approach to supply chains. I think that's going to be a trend that, as always, China is ahead of. It's already doing it. It's done it for decades. And I think the US is finally starting to smarten up and say, we're getting our lunch ate on this stuff. And I don't think it's going to matter whether it's a Biden or a Trump in there. You know, Biden made great strides in that sense during his administration. Say what you say of it, and you can agree or disagree, but you can't disagree that in regards to critical metals legislation, some really, really good stuff that was accomplished during his tenure there. And so looking forward to seeing what Mr. Trump keeps, what he scraps, and what he enhances, because I think, you know, if his administration is true to his word, he's looking to enhance the better parts of making America great again and take away the parts that make us not so great. We'll see how effective he is at that. I think that's the perfect segue into, you know, how we started 2025. I mean, you have just a fucking shit show of a scene in New Orleans, right? You have a former military veteran who is a US citizen and decides that he's going to plow into, you know, just streets full of people celebrating the New Year's on Bourbon Street in a city I absolutely love, New Orleans, right? I love New Orleans. We're there every year. I love the people. I love the food. I love the grittiness of it. I love the hospitality, all of it. I love New Orleans. And so absolutely heartbreaking to see the 15 people lose their lives. Of course, instead of us being factual right away, you know, we as a society, not we as in Nick and I, but we start politicizing it, right? Did he have an ISIS flag? Were his parents American born? Or did he cross the border illegally? Look, the facts that we know so far is he was a U.S. citizen who served his country proud, who was a military vet, not active, who apparently, and this is the speculation part, converted to Islam and you know, did what he did. Obviously, we'll have more information here soon. Coincidentally, and I don't believe in a lot of coincidences, Nick, so I'll put my tinfoil hat on here. We have another active duty military veteran who, by the way, was also in Afghanistan, who I think was also in Afghanistan in 2009 at the same time this other gentleman was in Afghanistan.
I believe they
Who,
may have been at Fort Bragg, maybe
they,
not together, but
yeah,
both at Fort Bragg. Yep.
both at Fort Bragg. This guy pulls up in a cyber truck of all vehicles, a rented one. They both rented from the same app, Trulio app or whatever the heck the name of the thing is, parks it, and it explodes in front of Trump Tower in Las Vegas. And yeah, he's killed immediately. Initially, they said it was fireworks, and then, you know, again, speculation begins, and now they're looking at it and treating it as, you know, another potential terrorist attack. But again, want to be clear, not that it matters, but U.S. citizen for active duty military vet. This is the part that's a little bit more concerning to
It's
me.
confounding. Yeah.
Very confounding. And, you know, my heart goes out to everybody involved, man. That's just a sad, sad, sad situation. And again, unfortunately, I think we're going to be seeing a lot more of this societally, domestically. I hope our law enforcement communities and our military folk, you know, continue to be diligent and really proactive, because we are absolutely going to need it. It's the stuff of fourth turning, folks. I mean, this is just the stuff that you see, and these aren't never one-offs. I said the first time they tried to kill President-elect Trump, I said, it's probably not going to be the last time. Not that I'm rooting for that, but I just, you know, these things don't tend to be one-offs. Then we learned of another plot, and then there was another plot, and then there was another plot, right? And now we get this, and simultaneously we get that, and they both happen on the same day, and just a lot of coincidences there. Well, we'll be curious to see more facts when more facts come out. But and my heart goes out to everybody out there. Just absolutely sad, sad way to start what should be a celebratory day, right? A day of celebration, a day of you know, setting intention and looking ahead, and also looking forward to being thankful for all the things. It's a shitty thing when you can't be on a popular American street giving thanks for the past year and excited about the new one without getting ran over by some asshole in a truck that's got, obviously some sort of agenda that he was willing to die for and
A
kill
grizz
for.
a grisly scene for sure, and, again, reiterate what you say, in a city that, I've been at every year for the past, I don't know, 12, 13
Yeah.
years. I saw the footage of him turning from Canal onto Bourbon. I'm like, "Oh, man, I've made that turn dozens of times," right? Walking down the street from Canal to Bourbon. So definitely intimately familiar with that area, and, yeah, obviously, sincere, um heartfelt condolences to those that are affected. And then you look at the one in Las Vegas, and very symbolic, right? That you mentioned the cyber truck. It's no secret Elon Musk and Trump have been joined at the hip for the past 6 months. And you see the symbolic image, right, of
Yep.
the Trump
Yep.
Tower in the background with the burning cyber truck right next to it. And yeah, you wonder like where it's all going to go from here, right?
Yeah, and again, I that picture, it is going to be another iconic picture, right? It's when President-elect Trump was grazed in the ear by a shooter that missed because he turned his head, half an inch at the very last second. I mean, that fight image. I said immediately that's going to be an iconic picture. Like for the longest time for future generations to look back. When we look at how 2025 started in this country, I suspect and fear um, that we're gonna look at that picture of that Cybertruck blowing up in front of Trump Tower in Vegas and look at that and go, "Man, there was more symbolism there than we realized at the time." And so, thoughts, prayers, good energies, not that any of it brings any of your folks back, people, but anybody that was injured, that had loved ones, anybody that's affected, on all sides, man, I wish everyone nothing but the best. Anything else to add, Dick? I know I don't want to get too long in the tooth here on that, but just obviously let's try to.
No, it's still real early. So, I don't like, jumping to conclusions and speculating about things. These events are very fresh. We got to wait for more details to come out. I don't like headlines where trucks plow into crowds, because trucks don't plow into crowds. People do that um, with trucks. Like, all the headlines are trucks plow into crowds. Like, we need to stop this obfuscation of the truth, right? Even today, a day later, when we knew the gentleman's name and identity, I think the headline of one of the major papers was "Truck plows into crowd." Like, those headlines don't sit right with me. We need to put the onus, the responsibility where it lies on the individuals who are perpetuating these acts. Just one thing I just happened to see in the media over the past 2 days, as that was going around. And the other thing you had on there was the UFOs, which have quickly disappeared. Um, I've been seeing a lot of stuff about weird fog on the Twitter recently, but that's neither here nor there. I saw one gentleman, he was making with a balloon. He had two cheap LEDs that he put in a balloon, and he sent it up into the sky. And he said, "Here's how to make the entire country freak out." Right? You can make a drone with a helium balloon and some $2 LEDs very efficiently. And so, who knows what it was? Some eccentric millionaire having fun, or maybe even not a millionaire, just somebody wanting to cause some chaos. But they did disappear from the zeitgeist very quickly. And what's been going up is sort of UFO and space stocks. They've been ripping higher, man. There's even a new ETF that debuted in the past 2 weeks with the ticker UFO, right? So, wonky, bizarre world out there. You could buy things that are happening in the real world in real time, in the stock market. And new ETFs are getting made very quickly. And the other one that's been going up a lot is quantum computing. Just to throw it in there, Google had an announcement a couple of weeks ago, and all of a sudden, these quantum computing stocks, not based on any fundamentals other than they're just quantum computing stocks, have been going up precipitously. So that's sort of that. That's the Bizarro Banter section of the podcast. And now we're going to get into premium portfolio picks, and we're going to wrap it up. So give me a second just to explain how this is going to work going forward, because some of you have had questions. This will be the last free version of this podcast. As we get into the 300th episode and beyond, the paid version of it will be behind a paywall. Let me explain what that means. If you pay, which $99 a year, less than $2 an episode, you'll get to watch us record this live. We've been doing tests for the past couple of weeks, making sure we have the process nailed down. And every week you'll get an email before we start recording, and you'll be able to come into the room and watch us record this podcast live, which means you'll get it several days before it's published on the interweb. There still will be a free version. published as normal on Monday on YouTube, but it will be stripped of this final section, which we're calling premium portfolio picks. So you'll get the macro takes in the beginning. You'll get the market takes where we talk about individual sectors and things that we're watching. You'll get all the Bizarro Banter where we talk about all the crazy stuff that's going in the world and how it affects our portfolio, etc. You'll still get all that, but you won't get to watch it live in the free version, and you won't get this premium portfolio section. So it'll be trimmed off when the free version gets published. In the next couple of weeks, we'll have order pages up. We'll be sending out emails so you can subscribe for $99 a month or $99 a year or $9.99 a month. And we'll be off and running with the paid podcast. There might be some kinks to work out, but that's how we're going to do it. And I think it's very beneficial for any of you who are subscribed to any of our premium publications that Digest Publishing, whether they're mine or Gerardo's or Chris Curl's or John Carl's, right? We're going to use this section to tie together the things we're talking about in our premium research because they all relate to one another, right? Like, Gerardo was talking about uranium and lithium stocks, and I cover some of that as well, albeit different companies, but we're going to use this section to tie it together. And it also, to keep it fair for those of you who pay for our premium research in the other
Yep.
publications, which is some of the feedback we've got. If you're paying $300 a year to get a newsletter from Gerardo about junior mining stocks, it's not fair that he comes on this podcast and talks about half his portfolio for free, right? So we're putting it, it gives you updates on the company. So we're putting the section of this podcast behind a paywall. It'll be on digestpublishing.com where all our other paid publications are. So just look out for that. In the next 2 weeks to come, we'll get that all buttoned up and get you all the details. And then, Gerardo, any premium portfolio picks? I know you didn't have anything on the sheet, but while we were going, you said you were going to give them a uranium name. I can probably guess what it was. I think
You know the name I'm going to give them because it's such a layup. It's such a layup, right? It's like when I told y'all, and man, by the way, Kingsman is still a layup, even after it's tripled since I started telling you about it at 25 cents. It sits near 52-week highs, near the 75-cent level. But the uranium pick is one that I keep calling out here and keep telling you is an absolute no-brainer at its current $5 million market cap, and that is URZ3. Ticker symbol is going to be
URZ.
URZ. Trades below 20 cents. It's a $5 million market cap. We know the team. We've made money with the team. We've done it many times. They have a large land package. I know they're on the M&A hunt. They have a Rolodex, not to date myself or them, but they have a Rolodex. It might still be a Rolodex, but they have a Rolodex that's as good as anyone in the space. And they know how to take companies in the uranium space and make them successful. And what I mean by that is not just that they know how to secure really attractive land packages that other people don't have access to. They also know how to communicate the message. They have capital pool experience. And that's so important because often you get a geologist that's great at the rocks and great at making a discovery and great at putting together a portfolio of awesome properties, but can't tell a story for nothing and just can't resonate with the market. And oftentimes those companies are the most frustrating to me because you look at the portfolio and you look at the great work that's being done, but there is no cohesive marketing strategy. This group knows how to market, knows how to build, knows how to make acquisitions. And again, this is a 20-cent stock that I think could be a $2 stock in a year in the right uranium market and with the right moves and some success. That still would only make it a $50 million market cap company, which is nothing in the uranium space, and especially in the uranium bull market that we think we will have. So that is a company that I own quite a bit of, a company I will likely buy more of, and a company that is as good a speculation in the uranium space at an early stage as any I've seen at the $5-6 million market cap level. So that is my pick for you. I'm also supposed to remind you to go to dailyprofitcycle.com/subscribe for all the free content that we're still going to be able to provide you, including editorial stock pieces, opinions, all the things from our talented team of editors, Mr. Hodge, and of course myself. So I hope you join us over on the transition for the podcast. There may be a week delay before we get that up and going. We will let you know soon enough. But I hope everybody transitions on over there. I hope you find value in it. It's been awesome thus far. We think the next 300 episodes are going to be as good, if not better. It's an interesting time. It's a volatile time. And We enjoy what we do, so we're happy to be able to share it with you. Mr. Hodge, thoughts on your end of it? Picks.
I'm also in the process of redoing that daily profit cycle /subscribe. So look forward to some new reports up there in 2025. It got a little sparse at the end of 2024, and I'm rethinking, how we do things. And I won't bore you with the details, but it used to be in the publishing industry, you put up a report about all the big keyword groups, right? Gold, oil, crypto, cannabis, da 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 da. We're redoing it, so it's only going to be stuff that we actually know about and are invested in, because we're about realness and transparency, and all these other companies that are putting up these reports don't really know about the things. They're just writing stuff to capture keyword traffic. So we'll have fewer reports, but more in-depth and more quality and more about what we're investing in. So look forward to that on Daily Profit Cycle in 2025. And then for the free pick, you and I are different, Gerardo, and then that's why we work well together. So you tell them about a $5 million market cap uranium company, and I'm going to tell them about Philip Morris, which is one of the larger the consumer products companies out there. They are a tobacco company, the manufacturers of cigarettes, and also Zyn, which are the nicotine pouches that you may have come across in the past year that seemingly everyone is doing, including Tucker Carlson, and some females are using them as a weight loss product. There's a real shortage of those nicotine pouches that metastasized or materialized in 2024. That's a stock we bought early in 2024 at around $90, and it ran all the way to $135. So that's a good 1 year move if you can get it. And let's pull back a little bit now to 120, but you're entering a new regime, right? We just talked about Trump coming in office. In the next couple of weeks, they expected to ease, regulations and regulatory processes. And they also have, they're going through the approval process for tobacco heating technology that's likely going to have a better chance of approval under Trump than it would have under a Democratic administration. And so this is a stock we've already owned for 10 months. One that we profited from, but I just wanted to alert you that, in Foundational Profits, it's where I do my retirement portfolio, right? This is what I'm writing about, these bigger stocks, how I'm allocating. And Philip Morris was one of them. It's still in the portfolio as of today. It's done really well for us, pays a really nice dividend. And those are sort of the fundamental reasons behind it. The Zyn and the move sort of towards vaping. They really have what you call, a smokeless future, I guess, is what they're transitioning to, away from traditional cigarettes toward the vapes and the heating technologies and the pouches. And so, it's a huge company. I'll wrap up because I'm not really making a good point here, but it's a $200 billion company, right? That's yielding almost 4.5%. And so anyway, we made a lot of money from it in 2024 and expect, for the reasons that I just outlined, that it'll have a nice 2025. And those are sort of the insights we're talking about for $9.99 a month, or $99 a year to get the insights on individual stocks that we're writing about in our premium publications. And as Gerardo said, we hope you'll join us on the paid side of things, because it really is a nominal fee to get those insights and to get them earlier and to watch it live. So that's it for me, Gerardo.
Yep, that's all I got, folks. It's been a good start to the year on the markets front, on the commodities front, on the U.S. dollar front. Turbulent start to the year here domestically, societally. Let's see where it goes. Stay safe out there, everyone. Tell your people you love them. I am Gerardo Del Real, along with my partner, Mr. Nick Hodge. This was the 299th episode of our weekly therapy session that we call Investing in Bizarro World. Want to wish everybody the best. Have the best 2025. Make it count, y'all.
Happy New Year, everybody.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.